All right. So here we are on NZD USDT. Right. Let me quickly type something on my screen to make it easier. Right. Let's say types of liquidity. Okay, let me just say liquidity part 2. All right, so liquidity part 2. As I said, we have transactional liquidity, right? Transactional liquidity. And now when I explain transactional liquidity, I'm like, transactional liquidity is for what? Is for correction. What do we mean by what correction? Right? Now, when we mean something is correcting, it actually means, let's take for example, when we have a break of structure, remember how market structure works, where we have a series of higher highs and higher lows. Now, when we have series of higher highs, higher lows, let's take for example, we are in an uptrend. You know that when price moves to the upside, definitely it will do what? It would correct to the what? To the downside, right? And when it's pushed to the upside, definitely it will what? It will correct to the downside. Now, I also explained last week that the previous high, let's say for example, price created an higher low here, created an higher high and corrected to the downside. Now, this higher high that was created previously is what we called what? Transactional liquidity, which is what? The TLQ, right? Now, whenever we have TLQ and price actually takes out this transactional liquidity, the short form is TLQ, we always have what? A correction. It's more like a transaction. And for the transaction to complete, after price has taken out TLQ, what do we have? We want to see a correction downward, right, for price to create an higher low. So quickly, let me show you an example of it. Let's take for example here we are in an uptrend, right? Now the way we are in an uptrend, we have price here. Look at this, higher low, higher high. And what did I tell you about this type of liquidity? When price pushed to the upside, what did you notice? Price actually did what? Price came to the downside, right? Price still came back. Downside to what? To correct. Now, in the process of this correction, what did you notice? When price takes out what? This transactional liquidity, what did you see? Price came down. Price took out the TLQ and what? Came down to what? To correct itself. Before what? Before pushing to the upside again. So, do we now understand what we mean by transactional liquidity? That is what we call transactional liquidity. Some people call it buy side liquidity. You see there will be like BSS. Yeah, that is what we call buy side liquidity, and that is how it works. That is transactional liquidity for you, and it's very simple. Now, let's quickly proceed to the second type of liquidity. But before we proceed to the second type of liquidity, let me show you some other examples on what? On TLQ. So that would enable you to understand more or understand it more better. Now, looking at other examples, you see that this is also what? A transactional liquidity. After price took it out, what happened? It dropped. Now, look at this. From this point now to this point, price took this out. We corrected to the downside. Now, look at this. After price took this particular point out, after price took this point out, this point here, we dropped. After price took out, anywhere that price took out an higher high, which is transactional liquidity, price always drops. And that is how it is. Now, price already took out the transactional liquidity. It dropped. It took out this transactional liquidity. It dropped. That is just what transactional liquidity is. For what? For correction. Now, I said we have the second type of liquidity that I talked about, which is what? Let me quickly look at it. I said we have structural liquidity for continuation. Now, what do we mean by structural liquidity? What do you mean by structural liquidity for continuation? Now, when we are trading, you understand that price moves from where? From one liquidity point to what? To the other, right? Price move from one liquidity to the other, one point of liquidity to the other. Basically, liquidity is what we are more interested in the market, and it's because of liquidity that price moves, right? Without liquidity, price won't actually move. We won't actually have any type of movement when there's no liquidity, when there's no buyers and sellers. How do price want to move? How do you want to benefit from whatsoever thing? So now, structural liquidity are just internal forms of what? Liquidity. That is why it's called structural liquidity. Now, remember, unlike the transactional liquidity, that when price, I said we have higher highs in an uptrend, higher lows. But now, before the higher low is created, inside we have some form of internal movement. Like internal movement, price does just not move straightly. Now, after price has done this and created, let's say, after it has finished correcting, then price created an higher low. Now, all these structural points is what we call what? Structural liquidity. All the internal movement is what we call structural liquidity. And price does what? Price is attracted to them always. And we said this for what? For continuation, which means price is always attracted to it. It's like magnets. Then price moves to it, take it out, moves to this, take this out again. Then you see price does something of this nature, take this out, move again, taking out transactional liquidity, coming inside of it, taking out what? Structural liquidity. Now, let me show you some examples. Now, let's take, for example, right, when price was coming down to create this higher low, when price was correcting, look at this structural point. This is what? Structural liquidity. This is structural liquidity, right? Now, what happened? I said it's like magnets. And look at it, price came, took out the structural liquidity, corrected, pushed to the upside, took out the structural liquidity, took out this. After it has now taken out this TLQ, what do you expect? A correction. Now, after price corrected, what do you expect? See, I said price will always create structural liquidity. Look at structural liquidity. And after price took it out, what happened? We have a continuation. And that is what we call structural liquidity. As I said, it is for what? For correction. Sorry, for continuation. For what? For continuation. And that is what we mean by structural liquidity. Now, the third form of liquidity we have is what we call the inducement. Inducement liquidity is for expansion, unlike the one we said for correction. Now, what do we mean by expansion? When we say price is expanding, it means we are actually what? In a downtrend. Price is what? Trying to what? To expand to the downside. What do we mean by expansion? Expansion is like this. Then we push to the upside. Then expansion is when what? Price push towards the downside. Downside. Expanding what? Downside. That is what we mean by expansion. Now, where is our expansion? Unlike the correction, which is for the what? For the what is it called? Transactional liquidity. This inducement liquidity is mostly found in a what? In a downtrend, right? And we said it's for what? Expansion, which means price is actually attracted to it for what? To expand. Now, let's take, for example, what happens? What happens now that we are in a downtrend, right? In a downtrend, we are meant to be creating series of lower highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now, all these points, this point is what? Inducement liquidity, right? The lower lows are usually inducement liquidity. Inducement liquidity, right? Now, let's spot it out. Immediately price takes it out, we are expecting price to expand. Now, look at this. Price takes this out. After price takes it out, what happened? Look at this. Price takes this point out. Take it out. We expand, right? After price did that, what next? He came back, took out the what? This inducement liquidity. After we took it out, what happened? Expansion. Anytime price takes out the inducement liquidity, we are always doing what? Expanding. Price took this out. Expand to the upside. Now, all these types of liquidity works hand in hand. Now, look at this. All these form internal liquidity, or all these are things that price is taking out inside. What do you call it? Structural liquidity. Price taking out what? Structural liquidity. Price taking out structural liquidity, and they work hand in hand. They work hand in hand. You might not like get it at once, but while you go through the recording will be made available. You'll be able to get it, but it's not something you should you should rush. While going through it, you jot down. So when you are going through the charts, you'll be able to check through whatever you jotted, and you get it at once. Now we have the last one, which is the order flow liquidity. And I said it's also called 3 BOS rule, and some people still call it price cycle inducement. Now, how does this work? How does it work? How does the order flow liquidity work? Now, the way the order flow liquidity work, we said 3 BOS rule. Now, after price has broke structure 3 times and has created an order flow, we always expect price to go back to its origin. Let's take, for example, we have this lower low, lower high, price broke structure the first time, lower high, lower low, price broke structure the second time, lower high, lower low, price break structure, right, the third time. Now look at this. Look at the break of structure I'm talking about. This is break of structure, more like inducement liquidity. Break of structure, break of structure, right, break of structure. Now, after we have this is an order flow has been created. Now, what does it now mean by order flow liquidity? If you go back to your basic aspect of liquidity, you understand what we mean by trend line liquidity, which is something of this nature here, this way, right? Let me just adjust this a bit. Yeah, this way. This is what we call a trend line liquidity that is formed here. Though people that trade with trend line or support and resistance, they'll be like, oh, price is currently bouncing here. So when it comes to this point, it will do what? It will continue selling, and they'll put their sell position at this point, and they'll target lower prices. They'll put their stop loss at this point. But now, since this order flow liquidity has been created, what happened? Price is expected to go back to its origin. Something of this nature. Price will just pick from this point here, and it will push back to its origin for where it started from. Then price goes back there and start coming down after it has taken them out. So let's quickly dive into the charts, and I show you an example. I pray I'm able to get it. Now look at an example of price cycle inducement. 1, 2, 3. Let me use this. This is the first one, right? This is the second one. This is the third one. But now after that, what happened? Price even proceeded to have the fourth one, right? You can have it 3 times, you can have it anytime, but once it's more than 3 times, just know that an order flow liquidity has been formed. Now, what happened? The next people will still be be buying from here, because they'll be like, price will still come back there. As I explained, they'll be like this. They'll be like, this is a trend line, and they'll be like, price would will buy from there like this, and they'll put their long position, and price would will take them out. Now, where did price go back to? Price went back to the origin, as I explained to you. Price would always go back to where it started from. After it has taken out people that are buying from this point. Now, if you check other examples, it works that way. Look at this. This is the first one, second one, the third one. What happened? Price took it out, went back to its origin, right? And that is how price cycle inducement work. Now look at this too. Look at this. We have the first one here, second one, third one. We even have the fourth one. At the long run, what happened? Price took out everything, like everything, and that is how it works. And now, if you pay close attention, you realize that everything we've been talking about, right? It boils down to the basic aspect of liquidity, but it's more refined and it's more advanced. It's even more simplified than the basic aspects where we talk about trend line, we talk about equal highs and lows. Aspect of liquidity, we have it on the YouTube channel. If you've not gone through it, probably you might not be able to get this aspect of what liquidity properly. And these are the types of liquidity we have. It's simple, and that is all. It's very, very simple. So I'm going to stop the recording here, and we have questions.